Welcome back to the Commercial Real Estate Show. I'm Michael Bull, your host. Thanks for being with us. Today we're talking about mixed-use developments. Please welcome my next guest, Kirk Demetrops. He is a principal with MidCity Real Estate Partners. Kirk, thanks for joining us here in Studio One.
Michael, glad to be here. Just had to drive right down the street.
That's great. Yeah, we appreciate it. And Kirk, you guys are doing a bunch of mixed-use developments, really, for this area of the country. You have a lot of different sectors you're involved in, a lot of different uses in these developments. Which sector seems to be most challenging right now? I think everybody realizes apartments are hot, but you're doing, hospitality, office, retail, everything in these developments. What seems to be the most challenging to get rolling?
Yeah, I think, ironically, it's the retail, and I say ironically because the retail is really the driver, the ground floor, the exciting component of it that drives people there, and therefore very important. But because of the retail tenant really kind of only can do so much sales in a space and so forth, that their rent can be capped and you just can't get more rent, so they usually carry more parking, higher level of storefront, so their cost, and it doesn't necessarily, it's not consistent with the rent we can get, but they're absolutely critical to the deal. So they're a challenge, and then obviously you want to make sure you merchandise it right, it's functional. So the retail, which is the most important in a lot of ways and drives the people, can be the most difficult and challenging.
And are more of these retailers getting more familiar with mixed use? Are they familiar with, hey, there might be less parking, hey, you might use less square footage, you might pay a higher rent per foot than maybe you did traditionally years ago? Are they starting to understand that better?
Yeah, absolutely. I think that they're seeing the pluses, and they kind of remember some of the challenges and some mixed-use deals that weren't executed properly. So, I mean, they are checking that it's going to work and it's and the parking works. But I think that the popularity of a placemaking, the pedestrian, is so powerful that they're really driving to it. And we're even seeing the suburban mixed-use develop, and restaurateurs that were only in town coming out to wherever they are and being very successful, and that's a recent thing as well. So
yeah, and that's interesting because I think most people think about mixed use being in town, right, being urban, and even your company name MidCity, right, in town. But you guys are doing a very large project that is suburban. So what kind of challenges does that bring to the table?
I mean, the one you're mentioning here in Atlanta is an Alpharetta, wealthy suburb. It's actually, I mean, you say challenges, I don't think because it's suburban is a challenge. I mean, it has a defined office market, daytime population, and all that. So that particular submarket, the land is there, and we're finding that not to have the challenges. Other suburban areas where it might not have an office market, it might be green or new, that would be challenging maybe to execute a mixed-use deal.
But that's an $80 million project, right? And you think of, if you take Atlanta, for example, our hot office markets are more Buckhead, Midtown and perimeter, where you're also doing developments. But I don't think most people outside looking in would think that far out of town. So what is that, 15?
Yeah, 10, 15 miles out of
town.
Yeah.
But you've got a pretty healthy office market, getting some pretty high rents out there, aren't they, at Avalon?
Avalon, yeah. Office rental rates are $30 a foot, which are 10-20% above the market, and retail rates are in the 40s and 50s. So yeah, that lifestyle center right down the street from our development has kind of made a new market in that area and kind of confirmed, kind of validated the strength of that market.
Yeah. So how are you finding tenant demand right now in maybe office or retail? What do you see for demand right now?
Things are really heating up. I mean, 2014, I think, was a transition year in this business. After 2010, 11, 12, 13, we saw things stagnate, the economy. The retail's coming back restaurant-driven, place-making-driven, obviously less big box and so forth, but we're seeing a lot of entertainment kind of retail restaurants where people want to come to it. As far as other uses, I mean, apartments have been going strong now for 3 years. I'm doing several deals with some prominent real estate developers. I mean, the millennials are certainly there, but the baby boomers are there as well. So a lot of things that were just on hold during the recession, this whole mixed use involvement is just kind of, it just got stopped, and now it's evolving. They can sell their home, they can move into these environments. And we see condominiums really right around the corner the next year.
That's interesting. So back to the retail tenants for a moment, is it the smaller shop tenants that you're having more of a challenge filling?
Again, the restaurants are there. The shop tenants are, we hope, the next leg to kind of come and be in demand, but they'll only be there if it's a great place. I mean, we're not seeing that small shop prevailing in just an average strip center, but it has to be a dynamic mixed-use deal, and we're seeing that. A partner of mine's did a deal in Woodstock, 7 restaurants out front, and then the shop space has filled up the last few years and become very successful.
So it took a while for those to fill back in.
It did, yes.
Okay. And you mentioned selling space rather than leasing it. So how does that impact you as a developer of mixed use when you're deciding, well, we're going to sell these condos, or we're going to rent them, or that we're going to sell these office properties to users, or we're going to lease them and control the space? How do you make those decisions, and how's it impact
Very good
the
question. I
development?
mean, we've actually, as a company, sold a lot of office space, so we kind of know that dynamic. So going in, I mean, always how you going to exit a property as a developer. Are you going to hold? If you do hold, when you exit, are you prepared to exit? So we think about a lot of things. I think we make sure that we can break the uses up if we need to. I mean, certainly there's more and more buyers that will buy all the uses, but less. So we might have a condo to retail, so we can sell that separately. Be able to condo the apartments above. The office buildings, selling those or leasing is really case by case. Typically, if we want to control the whole environment, we'll maintain a lease. And then as far as the residential, it's market driven. We're not averse to having condos above us versus apartments. It'll just be market driven.
And as far as managing the development, we're short on the break here, but you're bringing in partners on some of the uses?
Correct. Yeah, we are a master developer, mixed-use developer, and that means we really can underwrite a deal. Then we usually bring in a great residential partner. If we did a hotel, we bring in a hotel partner, and then we own the office and retail. Typically bring in a retail specialist to lease and merchandise.
Yeah. Oh, that's great. You guys are doing some nice developments, and I'm going to get into some tips and some other challenges, and maybe some tips for tenants, or maybe tips for buyers of these things, and then how you're setting these up to exit them, a little bit more about that. Well, stay tuned. We're going to have to take a short break. We'll be back with more on mixed-use developments. I'm Michael Bull. This is the Commercial Real Estate Show. Stay with us. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about mixed-use developments. Kirk Demetrops is here with MidCity Real Estate Partners. And Kirk, one of the things that you guys are pretty involved in, and I think is important to a lot of listeners around the country, is the zoning and entitlement process. How are you guys finding that today? Are some of these municipalities kind of more open, and some of the neighbors more open to mixed use, or is there still some battles there?
I think there's still some battles there. I think a couple years ago, coming out of the recession, the jurisdictions were hungry for development, and I saw a window open up. But I still think it's kind of back to some challenges. They're very open to mixed-use development. I think that's what they want. I think the challenge there is sometimes they try to dictate what's within the box. So if you have a 4-story mixed-use development, 25% of it retail, and those percentages can be difficult. You want the market, we believe, to lead what's within there, and so it can be successful. So if you try to force something, so much retail on the ground floor, for example, you can run into difficulties of a sustainable project. So it's a fair battle out there when it comes to zonings, the neighborhoods, and people's adversity to change. But we are seeing that they're going to other places and seeing these dynamic places that they like, coming back from traveling to D.C. and now in even the Southeast, and saying we want something like that. So you can take them places and kind of they can see what they're going to get, which is helpful.
So as part of your mission then, when you're in that zoning and entitlement process, to say, look, understand you want 25% retail, but you also want a viable project. You want it to work, and you want the retailers that are here to do well. So you're showing a market information to help them understand, hey, if you want it viable, this is what we think should be there, and are they listening?
I do. It takes time, but we are a very open book, and we're very educational, because at the end of the day, as private developers, it's our money that we'll put on the line. So we take the time, and we just continue to show them what we believe to be the truth as developers. So I do believe they're listening. It is a balance. There's no doubt.
And we hear some tales that it can take years upon years in some of these major markets. What do you find in a market like the Southeast for zoning and entitlement process?
I think for particularly a mixed-use deal, you're looking at a year base case.
Mm-hmm.
It's technically a 6-7 month process, but to get started to apply, and then deferrals. I mean, we count on a year to go ahead and rezone a significant project in this marketplace right now.
Okay. And what are some of the other challenges that you might hit today doing a new mixed-use development? Is construction costs and labor one of the challenges?
Yeah, I think you hit it on the head there. I think as the economy's ramped up, I mean, as we hit this in the middle of the cycle here, construction costs are up 20-25%, sometimes more.
Wow.
Contractors coming off of a great recession have been slow to ramp up because they're doing well and they've been there before. So yeah, I think that's an issue that's hitting us right now. Residential led the charge with increasing construction costs, and multifamily a year ago, and commercial, we're pricing things out right now, and the numbers are coming in high. So that is a challenge that's in the industry today. Yeah.
Okay. Could you give us a tip for a tenant maybe that's going into a mixed-use development, or maybe an investor is buying part of a mixed-use development, of how to be successful?
Tenants, I certainly think if you're going into a mixed-use deal before it's constructed or it's under construction, you really need to take the time to understand what they're building and know if it's going to work. I think I've seen a lot of examples where the finished product, the tenant didn't quite get the parking, the convenient parking and so forth. Investors, same thing. I think that it is the future mixed use. So obviously the numbers making sense and so forth. But the condo docs are very complicated. You have to spend a lot of time with that. I've delayed buying properties for months to redo those, and those can be very important. If they're wrong, if they're not set up properly, CAM charges, for example, a disproportionate sharing of those can cause problems. So I think those are the little things that you need to spend a lot of time on.
Very good tip, Kirk. Thanks for joining us today.
Thanks, Michael. I appreciate it.
And thank you for joining us on the 42 radio stations, iTunes, YouTube, and the show website. Be sure and join us next week, not next year too. Healthcare and healthcare real estate. Until next week, be sure you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. RealNex, software for productivity. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit creshow.com.